Bitcoin just crossed $30,000. Will this rally continue or not? Why are big amounts of Bitcoin being moved to exchanges? And are smart investors more than ever interested in AI now? This is your Altcoin Buzz news. Hey, what's up, everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO. And as always, this is not financial advice, and we wish you the best of luck in your crypto ventures.
I didn't ever try to commit fraud on anyone. I was excited about the prospects of FTX a month ago. I saw it as a thriving, growing business. I was shocked by what happened this month.
FTX has been exposed again. The new management of FTX, headed by CEO John J. Ray III, today released its first interim report on control failures at the collapsed crypto exchange. The 45-page report, published on Sunday afternoon by FTX, describes in painstaking detail FTX's terrible record-keeping, near non-existent cybersecurity defenses, and its sparse expertise in key areas like finance. One of the more eye-catching items concerned Alameda Research, the trading firm that allegedly had access to billions of dollars in customer funds stored with FTX. The report often states that Alameda often had difficulty understanding what its positions were, let alone hedging or accounting for them. Former CEO Sam Bankman-Fried, now under house arrest and facing a litany of criminal charges, described Alameda in internal communications as hilariously beyond any threshold of any auditor being able to even get partially through an audit. He went on to say Alameda is unauditable. I don't mean this in the sense of a major accounting firm will have reservations about auditing it. I mean in the sense that we're only able to ballpark what its balances are, let alone something like a comprehensive transaction history. We sometimes find $50 million of assets lying around that we lost track of. Other striking items in the report include a claim that most major decision-making was closely controlled by Bankman-Fried and top executives Gary Wang, the CTO, and engineering director Nisad Singh, who are both now cooperating with authorities and have pled guilty to charges. The report also claimed that FTX had no dedicated personnel in cybersecurity, leaving such matters in the hands of Singh and Wang, who lacked the experience of training to handle the firm's complex cybersecurity needs. The management of private keys and seed phrases used to control access to the crypto assets was shambolic. In one example, private keys for over $100 million in Ethereum assets were stored in plain text without encryption on an FTX group server. In another, single signature-based keys that controlled access to billions of dollars in crypto assets were stored in an AWS secrets manager or a password vault, each accessible by numerous employees, and many private keys were stored without backup procedures, meaning funds would be permanently lost if the associated keys were lost. XRP, a digital coin often used to make international payments, has rallied nearly 40% in the past 4 weeks, outperforming other top digital assets, including Bitcoin. The rally was mainly driven by retail investors, while whales or other entities with ample capital supply added to bearish pressure in the market, according to an analysis by research firm Kaiko. They said looking at buy and sell transactions on the two largest Korean exchanges, Upbit and Bithumb, market sell orders overwhelmingly outpaced market buy orders for over 200k XRP or $95,000. In contrast, the buy and sell ratio was much more balanced for smaller orders. The sell side imbalance in market orders of more than 200,000 XRP tokens suggests that whales have been selling into the price rally and that individuals and non-professional investors did the heavy lifting. Trading volumes in XRP and Korean won trading pairs on South Korean exchanges Upbit, Bithumb, and Korbit soared last month, accounting for a giant share of the global activity. XRP has been rallying on hopes that Ripple Labs, which the U.S. argues issued the token, will win its legal battle against the Securities and Exchange Commission. Almost 1 month in the making, the final surge to $30,000 delighted many traders who considered the move to be a matter of time. Having uploaded a roadmap showing Bitcoin continuing to gain, Crypto Kaleo argued that Bitcoin was still the best investment allocation for capital rather than cash or altcoins at current prices. Kaleo said, Bitcoin is breaking out. Of course, all of the USD charts are going to look decently bullish. Look at the alt charts versus Bitcoin. I don't see any of them I like at the moment. Thus, while you might still be up in USD with some alt positions, your capital is best allocated stacking more Bitcoin. Dan Crypto Trades meanwhile gave more attention to altcoins, entertaining the idea that Bitcoin USD may now consolidate. He said, it'll be interesting to see what happens around here. I suspect we might see a cooling off a little bit, which means alt Bitcoin pairs should gain some ground. On-chain analytics platform Sentiment tweets, Bitcoin is a top 4 trending word in crypto following its jump above 30,000 for the first time in 10 months. Comparing the hype around this resistance break compared to the 25k cross 4 weeks ago, we see 82% more mentions of the long-standing milestone. But meanwhile, Looks on Chain tweets that a whale has just transferred another $60 million of Bitcoin to Binance after sending $62 million there a few weeks ago. Typically, when whales send to exchanges, it's to sell. So is this sustainable and will keep rallying, or is there going to be a sell-off? My research team found 3 reasons why this rally might sustain. The first reason being price action. Bitcoin was in a serious consolidation area in the last 30 days. The price wasn't moving at all and the volume stabilized. This was the cool-off period after the 20 to 27K pump, so this recent move may be sustainable and the breakout has enough volume. The second being the funding, the on-chain data, and the social mentions. In the last 360 days, the funding was relatively stable, with a balanced positive and negative funding, which signaled a sideways market. But two big crashes happened in November 2022 and March 2023. The moves were further encouraged by a series of liquidation events. In the last 360 days, the Fear and Greed Index recovered from 10 at extreme fear to 68 on the greed scale. But notably, it has not entered the extreme greed levels, which is 90 plus, so even though the market is a bit greedy, it's healthy in a bear market recovery, and it's sustainable. A possible reversal could happen when it reaches 80 to 85. And the third reason being the macro. Banks have collapsed like Silicon Valley Bank and Signature Bank. Institutions collapsed like FTX and 3AC, but the inflation rate did not collapse. Although CPI numbers were low, it didn't account for the rampant inflation and unemployment. More people were drawn into risk-on assets after the rise of gold and other commodities. Crypto is also the best risk-on asset. Most recently, Hong Kong has decided to legalize crypto, allowing people to invest, keep, and profit. This is positive as many Chinese whales could return to crypto and become more active. The ban on crypto trading from the People's Bank of China fueled the dip from 64K in June 2021, and now a change in policy could trigger the next bull run as well. Ethereum staking deposits have declined slightly in recent weeks due to increased regulatory pressure and the Shapella upgrade slated for tomorrow, April 12th. On April 9th, Glassnode reported on the current state of the Ethereum staking ecosystem. The data revealed that deposit activities are currently low due to regulatory pressure and the Shanghai upgrade. Financial regulators in the United States have been coming down hard on crypto this year, and the Securities and Exchange Commission is adamant that Ether is a security and has cracked down on staking despite there being no official legislation from the Congress classifying ETH as such. The Ethereum network will undergo a long-awaited upgrade on April 12th, the Shapella hard fork, also known as the Shanghai hard fork. This will enable the phased release of ETH staked on the Beacon chain. The firm also noted that major centralized exchanges such as Coinbase, Binance, and Kraken have lost a lot of market share to liquid staking platform Lido. Lido currently accounts for almost a third of the total amount of ETH staked. This equates to around $11 billion from the 5.9 million ETH on the platform. Centralized exchanges such as Coinbase take a hefty 25% commission from the staking rewards, with Coinbase's commission being even higher for other assets such as Cardano and Solana. Lido takes a 10% commission and offers the potential of earning additional yields on DeFi platforms through its staking token, Lido Staked ETH. This explains the shift over time as savvy investors switch to more profitable platforms. What impact do you think the Ethereum Shanghai upgrade will have on the ETH price? Will it go up, down, or no change and it's priced in? Let me know in the comments down below. The launch of ChainGPT is shaking up the cryptocurrency world like never before. The AI token went live yesterday, and with its incredible success, the price has skyrocketed to a mind-blowing 50x. ChainGPT is an advanced AI model explicitly designed for blockchain technology and crypto-related topics. It uses the latest algorithms and high-speed computing capabilities to address challenging issues in the blockchain and crypto space. Using ChainGPT, users may quickly obtain whatever knowledge and information they require. Among its unique features are blockchain and crypto information, no-code smart contract generators, smart contract auditor, code debuggers, code to words, documentation creator, chart analysis and technical analysis, AML features, blockchain analytics, on-chain live data, source of news, and much more. Also, the zero-knowledge Layer 2 blockchain CryptoGPT has cashed in on the recent surge in interest around artificial intelligence to raise $10 million in funding. The Series A round, which was led by market maker DWF Labs, which has emerged as one of the most active investors during the crypto bear market, gave the AI-focused blockchain a $250 million valuation. CryptoGPT recently rolled out a Web3-focused AI assistant named Alex and is developing its ZK Rollup Layer 2 blockchain and data-to-AI engine, which collects, encrypts, and transfers data for commercial applications. Instead of applying ZK technology to payments, CryptoGPT integrates it for more private data transfers. CryptoGPT's broad aim is to allow users to earn money by monetizing their data across fitness, gaming, education, and it also plans to roll out non-fungible tokens that store the owner's activity data. Millions of Aptos tokens will be unlocked on Wednesday, April 12th, in a planned move that is set to increase the circulating supply by 0.5%. Aptos rose nearly 8% in the past 24 hours, outperforming Bitcoin in the broader market. The Aptos network is currently valued at over $2.3 billion by market cap, and the Aptos unlock is valued at over $50 million based on current prices. Unlocks refer to the automatic release of new tokens belonging to any blockchain network into the open market, often based on token vesting schedules. Currently, 84% of total Aptos tokens are still locked, meaning current valuations could likely dip in the long term, as the bulk of the tokens are still yet to hit the market. You can check out our articles on Aptos on our website, linked in the recommended reading down below. That's it for your Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.